Good morning. It's Friday. I can't wait. It's been a heck of a week. Today is one of those days where the headlines are full of negative Nellies. For example, CNBC is reporting that Goldman's head honcho David Solomon is warning about a stock market drawdown and, quote, people won't feel good. Ooh, scary. Sign me up. The boogeyman's out there. Not to be outdone, Chicago Fed President Goolsbee is a little wary about cutting rates too quickly, according to Reuters. Then there's the Financial Times out of England highlighting how multinationals race ahead even as a dollar slump divides the U.S. stock market. Give me a break. Do not let this kind of stuff faze you. Here's why. The S&P 500 has jumped nearly 40% and gained roughly $16 trillion in value since April 8th when they said the sky was falling and that we were all in for doom and gloom. Now, could it fall again? Could it fall in the short term? Sure, that's always possible because that's how the markets work. But here's the thing you really want to think about if you're serious about investing. This could be another Templeton moment, and I'd hate to see you miss it. So let me explain what I'm talking about. You may not know the story of the late Sir John Templeton, but he was a master, and here's what you need to know about him. Back in 1939, on the eve of World War II, when headlines were every bit as dire as they are today, the late Sir John Templeton did something that is now the stuff of legend. He famously purchased 100 shares of every company trading on the NYSE, New York Stock Exchange, for less than $1, including 34 companies that were already bankrupt. Think about that for a second. A few years on, he sold all but four for ginormous profits. Now, Sir John refined that philosophy in what he called later would come to be known as buying into points of maximum pessimism. He is now, by the way, regarded as one of the greatest investors and stock pickers of all time. How great? Well, a $10,000 stake in his Templeton Growth Fund, when it launched in 1954, grew to more than $2 million by the time he sold it to the Franklin Group in 1992. That, my friends, is a compound annual growth rate, a CAGR, of about 15% and an absolute growth rate of 19,900%, give or take a few percentage points. Now, to put that in perspective, right, the S&P 500's long-term average is closer to 9 to 10% a year, meaning that Templeton's choices and his philosophy compounded wealth at nearly twice the market's pace for almost 4 decades. The point I want to make is this. Every dip, every crash, every headline of doom and gloom always looks huge in the moment. But the market's long-term trajectory is unmistakable. It goes up and to the right. Innovation never stops, and neither do the profits that come with it. I want you to take a good hard look at the written version of the 5 with Fitz today. There's a special chart I call the Since 1871 chart, and it highlights this relationship very, very clearly, very succinctly. A lot of 5 with Fitzers, a lot of people watching the video tell me they actually print that chart out and they tape it to their monitor or their mirror or whatever because it helps them get through periods of short-term angst. Now, I cannot overstate how important this concept is to your investing success. And this is why. Most investors play not to lose, and it holds them back because they're constantly framing every headline, every conversation, and every social post because they fear the worst, right? Now, the world's most successful investors, people like the late Sir John Templeton, Uncle B, and some others we talk about regularly, flip that around and they focus on success because they plan for the best. That is why I constantly encourage you to take a page from their playbook, and not for nothing, why One Bar Ahead is built the way it is. There is one universal truism when it comes to your money, and here it is. Missing opportunity is always more expensive than trying to avoid risks you can't control. Now, here's an investing tip in this department, as if that wasn't enough. On days like today, when the negative Nellies are out in force, I find that turning off the TV, stepping away from the screens, the social media, and the nonsense makes a huge difference. I can think more clearly, focus better, plan my next moves more efficiently. I'll often go for a long walk with my bride, or perhaps even enjoy a motorcycle ride too. The thing you want to think about is that you want to give yourself permission to relax. Your portfolio is going to like it, trust me. And speaking of portfolios, on a related note, it is Issue Friday. If you're a member of the One Bar Ahead family, you know what that means. Keep an eye on your email for the October issue, which will be published later today, a few hours from now. In it, I've got a new recommendation in a space that I have been itching to make, but haven't because the hype has been too high. Now that's dying down, which means the timing could be perfect, just like it was under similar circumstances for several other key names that we followed over the years, chief amongst which are Palantir and Nvidia, two of my favorite stocks. There's also a look at 6 skills to master for staying in winners longer instead of selling out prematurely and missing a big run, like a lot of investors do, much to their regret. Almost nobody talks about that, but more investors probably should. There's also, of course, the portfolio review, a new fascinator, and a look at something I've discovered recently that could be the original fountain of youth according to the latest research. Now, that's key because a strong body plus a strong mind equals strong results, at least in my humble opinion anyway. Today's bottom line: you attract the energy you give off. So, invest in optimism and attract profits. Good vibes and positivity are contagious. As always, let's make it a great day and finish the week strong. You got this, I promise. And as always, I will see you next time. Thanks for watching. Have a great weekend. Well, technically, make it a great weekend. See you Monday.